deze computer. Thank you for reminding me.
No problem. Just a moment. All right. Can everybody see my screen? Okay, good.
Yes, yes.
Okay, okay. So hello, everyone. Welcome to this talk. I'm really delighted to be here, try to break down this cryptic area. I was telling the more I read, more confused I get, but hopefully I will be able to, I would not, I'm a professor, so I'm not going to say teach you something, but hopefully I will be able to give you a snapshot of what this is about. I'll give you a disclaimer first. I will go over the basics of cryptocurrencies, its pros, cons, history, etc. But I'm sorry, I won't be able to give any investment advice. I'm just going to lay it down in front of you, what this is all about, and you make your own decision to invest or not. Okay. So just a moment, I'll just adjust my screen a bit. Okay. The definition of cryptocurrency is that it's a digital currency in which transactions are verified and records are maintained by a decentralized system using cryptography rather than by a centralized authority. So what does this mean? It means that generally, the currency that we use, dollars here, is an example of fiat money, which is issued by the bank. Banks have to, banks is part of it. We have the Federal Reserve system, the Federal Reserve Bank, which is the central bank of US, and it is the primary bank, and government is very much part of this kind of a system. Otherwise, this money will not be accepted. Now, the idea of Bitcoin or cryptocurrency is that we are doing away with this banking system with government, and we are going into this decentralized system, which is possible, which has been possible to do so by technology. So somehow technology is substituting the role of banks. And so this whole idea, the way, the nature through which this works is a little bit cryptic, because it's designed in such a way to not, to be, what should I say, like for users, it should be easy to use. But on the other hand, if it's substituting the complex nature of banks, then it has to be very, very secure. It has to not be something, a very simple system where anybody can, crack the code and do fraud. So how is this possible? Okay, so how can banks be done away with, and how can it be possible to have technology do it for us? So before I go into a lot more details, there are some names out there. Though we will spend most of the time talking about Bitcoin, which is through most popular one, and through which this kind of a system basically started. But there are actually more than 9,000 cryptocurrencies out there floating around. Not every one is is important. Most of those are not important, and since it's a decentralized system, there's no regulation. It's very, very easy to come up with a Bitcoin. Come up with a cryptocurrency. So, for example, this Dogecoin is one such meme coin. It was really started as a joke against this Bitcoin by two people. Most likely they were in Australia, and in 2013 they wanted to just make fun of this kind of like what Bitcoins were doing, or these kind of currency was going after. And so they chose this meme at that time, this dog named Dodge, and that was a Japanese Shiba Inu or some dog like that, and that meme was going around, was very popular at that time, and Bitcoin was getting popular. So it kind of connected those and make this Dogecoin, which was really like just started as a joke, and now it's around, and it's it has a value, it has a market value, and it is trading at price. I mean, people are going and people are buying those coins, so it's as easy to start, but it's sticking around. So we will talk about so basically, there are several kinds of cryptocurrencies available, but the most popular one is Bitcoin. So how did it all start? So this history is as fascinating as this world of cryptocurrency. So it was created in 2008, and we know at that time this Great Recession was going on, and at that, Lehman Brothers, you would know better than me, Lehman Brothers and Bear Stearns, and this whole financial world was under collapse. And I think that was, so that timing was also critical. This idea, this this white paper came out on Halloween into 2008, and this paper is the paper that I was referring to, like a white paper, and not a very long paper, 7-8 pages paper, and it is written by this Satoshi Nakamoto. Now, nobody knows who this person is, or if this is one person, or is this a team or a group of people. Till date, this person owns the maximum number of Bitcoins, 1 million, I think he or they own, and they have not claimed it. He or this person was around, for 2-3 years, until the last time it was heard. They would, talk in the forum, crypto forum or something like that. And I'm saying I don't even know, right? I mean, we don't know, but this fictional character wrote this 9-page, it's written 9-page, sorry, so it's been a long day. So 9-page white paper, and charts out all the details of how this kind of system can work. And so another fascinating thing about Bitcoin, which is unlike money, is that money supply is unlimited. Government can print as much money, cash as they want. They can print money, but the Bitcoin, it's mentioned in that paper that the total number of Bitcoins is fixed. That's capped at 21 million. Okay, that's not going to change. And until today, so this is the last time I checked, it was in the afternoon at 1 o'clock, the Bitcoin, number of Bitcoins in circulation were 18.9 million. So it started in 2008. So I think to the beginning of 2009, the Bitcoins were available. It was not that popular. It was in, within this close community, because nobody really knew about it. It was really high tech. Only some interested techies knew about it. And then in 2022, we have this many Bitcoins available. And it, I read somewhere that it might take until 2040 to reach this 21 million. There's a weird, algorithm that, churns out Bitcoin every 10 minutes or something, but the speed kind of slows down as we are nearing the 21 million. So there is a limitation of how many Bitcoins are there, and it has, the circulation needs to be within that. So unlike the dollars or pounds or any traditional currency that we know of, Bitcoin is created, distributed, traded, stored, everything in a decentralized ledger system, which is known as blockchain. So this is a blockchain technology that is talked about. And blockchain is not just used in Bitcoin, though I believe it started with this Bitcoin technology, but it can be used in education, in voting system, because it's something that cannot be hacked or cannot be repeated. Like, it's like every block is unique. And so nothing could be deleted. If there's something up on a blockchain, it's there, it's permanent. I read somewhere or saw a documentary where someone wanted a letter to be seen by everyone, and just to get attention, puts it on a blockchain, and it's there, it's timestamped, it's there forever. So nothing could be deleted. So that is the inherent security of the Bitcoin, this cryptocurrency, that not that it is highly secured. Now, what is this blockchain technology? So if you look at this infographic, this so for example, there is a transaction, and the transaction could be, I want to buy something with Bitcoin, so I request a transaction, and that goes to this network, which is just different computers being connected together. And this world is really the sci-fi world, really, because these computers are, so they're working off some servers, and they are located in some secret place. Like in a documentary it showed, like somewhere in Switzerland they have some, and it's very, very secretive, to access those. I mean, nobody has access to any particular data or anything, but it is, if this technology needs to work, you need that kind of infrastructure. And that is, again, this is something global, and some are in Russia, probably some in Switzerland, some who knows where. So it's these network of computers get the information, like that there's some transaction is going to happen, and it gets validated. Now, so computers are not working on their own. So there are people who are called miners who are there working, for this. So it's not like, but who's paying them? Nobody is paying them, right? So it's just, so it started with some techies who were just interested in doing, experimenting, doing something completely novel, something new, and they started playing with it. So there are miners sitting all over the world, and they are sitting there, validating these transactions. Once it's validated, it's verified. Now, it could be just not cryptocurrency. As I said, blockchain technology could be some contract, records, any of those, which is basically using this kind of technology. So once it's verified, it forms a block. That's where the blockchain name comes, because this block gets added to the existing chain that is formed by different blocks. This kind of technology, this is why the technology is so robust, is because this blockchain is unique. whenever new information comes in, new transaction comes in, and when new transaction means sometimes, like new Bitcoins are created, all those are getting added, a new block is formed with new information and it gets added to the existing chain. So that is the key, that if someone wants to hack the system and take out one block, it would just disrupt the whole thing. It's not possible to take anything out because it's like a chain. So if one block is affected, it affects the previous one, it affects the next one. So it's not possible. And then after doing all that, the transaction is complete. So this is what I understand of blockchain technology. This is the technology that is being used for minting Bitcoins. Now, why did it become so popular? First off, it's a peer-to-peer digital cash. It's sort of like, when we pay, when we use, now we have what, Apple Pay, Google Pay, or something, you're paying off your phone. It's sort of like using digital cash, but you're using your credit card, which is linked to a bank, and you get a statement. So it's like bank is involved. So it's like you're borrowing something that is, and which you have to pay back, or if you're using your debit card, you're taking money off your money, right? Your money off your credit current account, checking account. Here we're saying that, there's no bank, right? So it's like I'm transferring money to Isabel and I'm just doing this digitally. And it's like, we don't need PayPal or anything. We are just doing it through Bitcoins, and it's my Bitcoins going over to Isabel's. And when this transaction is happening, all that blockchain technology is passed through. People like it because as I said, like the timing of this formation was when there was a financial crisis, and most of you would know better, as you've worked all your life and now either retired or approaching retirement. When your savings is in jeopardy, then you get, you're not happy, and you get cautious. So here, when we don't have banks, this is what people like. They can eliminate middlemen. They don't have to pay commission to the banks. They're not paying interest or anything. They're just, it's one way of investing their money, and that is purely theirs. So you are becoming your own bank. You take charge of your finances, and you are putting your money in a system which cannot get hacked. So that's what people like. And also, since this is taking place through phones, like you don't need a computer, you just need internet for this transaction for Bitcoins to work. It provides transparency, because sometimes what people don't like about government taking decisions on behalf of us is they don't consult us, and sometimes when they're they're increasing money supply, they're printing more money, they are then we have inflation, and that takes away our savings, that that diminishes our value of our savings. So people don't like all these, right? So people want that kind of more control on Bitcoin. So you can separate money from the state, like not just in US is still much more stable, but there are countries where the savings, like in Argentina, the savings used to get confiscated by the state, and so what would motivate you to work hard and put money in the bank, right? if you don't know what, if you're going to have access to those in the future. Then it's also called a digital gold investment, because generally when things are getting more expensive, or when investment opportunities are not that great, money is losing value, people try to hedge by putting money in gold. So it's also thought of as a as a hedging scenario. Like, you don't want to put in dollars, you want to put in bitcoins. But that's why it's called digital gold. But I also read up a paper that recently the correlation between bitcoins and gold has been not that great. Like, people still invested in gold much more than bitcoins. So not always this goes hand in hand. And also, when you're looking to diversify your portfolio, then also this is part of an anti-fragile asset class, where people can just not put all the eggs in one basket and just spread around, and Bitcoin is one such good avenue. But it also fosters illegal money laundering activities. So, what I have been saying until now, that people started liking this idea because it has nothing to do with government, but also this kind of transaction, at least in the beginning, was, since there's no regulatory authority, and this the transaction is taking place between two parties completely, like it's private public. You mean like the blockchain technology is public, but it's when I'm sending the money, then I need to know Isabel's like email ID or something like that, like a Bitcoin ID, and then I can just send it to her. Nobody else gets to know. So this also fostered a lot of illegal money laundering activities, because people loved this idea that they don't have to they are not answerable to anyone. And so that is one of the main concerns, that government is really worried when bitcoins get too popular. It's because it's difficult to track. And that that's why government wants to put taxes on Bitcoin investments, but also put more restrictions on Bitcoin trade. In 2013, this became very popular, that one of the websites which used to deal with drug peddling and all that, Silk Road, that was ultimately closed down in 2014. That that had only Bitcoin as the currency for trading, and that was becoming very, very popular. But then the owner was arrested and for money laundering. So this is some concern with Bitcoin. Now, the price of Bitcoin, it was pretty flat in the beginning until about 2017. Then it started spiking up. So you see here, it started around like $123 for a Bitcoin. Now, last year it was 34K, and this is another one, from 2014. You see that in 2021, in November, actually, it reached its all-time high of 68,000, and before that, it reached 63,000. So imagine, it started from $123 in 2013, and then it shot up to 68,000 in November last year. And today, I checked at 1 p.m. This is very important to mention. When did I check? Because it's so volatile. Now, if you check, you might get you should get a different figure. High or low, we don't know. Because it's 10% volatility is really common. And so if you look at the figures, you see that it reached, so in April it was 63K, then it started falling, and it fell to like in the 30s in July, August, and then it shot up to 68K, and again it's back at 43. but what I understand is, if you will not lose if you keep some money in Bitcoins, because the way it has fared in the last few years, if you go back and look at this chart, it's on the rise, it's gaining more acceptability, and it's not coming back to the previous figures as below. So it may come down to 30 grand, but it's going to shoot up again. Now, so some interesting statistics is that it took 10 years to reach 20 grand. That was in 2020, but then in the next 17 days it reached 30 grand. 5 days it reached 40 grand, and then it took a little more than a month to reach 50 grand. And then, as I said, in April it reached 60 grand. So you see how the prices were increasing after 2020. So as I was saying, some countries are really pro Bitcoin, some are not. The countries which has completely banned Bitcoin is China and Russia, Bolivia. Interestingly, China had the maximum number of Bitcoin miners, and then China had a crackdown on them. Because how did they get to know, or why countries are not very favorable to Bitcoin mining is because it's very, very electricity consuming. So I'll come up with some figures soon. And so that's one of the reasons they don't want. And also, as I said before, so Bitcoin mining takes up resources for that country, but also, if a country becomes too engaged in Bitcoin, then the government loses its powers. Bitcoin itself is very transparent. That technology is transparent, but when government don't have control on money supply, then that becomes an issue. So, that's why countries are pretty divided on this issue. It's legal in US, Canada. In India, it was not legal before, but then they made it legal pretty recently. And then there are a few countries which are supposed to join this year. That includes Cuba, Panama, etc. Now, from an economist point of view, what I was interested in is, can Bitcoin become a currency? Okay, and that question still, kind of haunts me, bothers me. And El Salvador, I'm going to talk about that in a moment. El Salvador is the first country to adopt Bitcoin as a currency, and that started last September. So in order for Bitcoin to be a currency or money, it has to suffice these three. One second here. These three. I'll go back to that slide. But since I started talking about the functions of money, I'll touch upon these first. So any something to be considered as money. So gold was exchanged before. So gold was money before. So for anything to be money, it has to have suffice these three conditions. First one is medium of exchange, that it's an item that buyers and sellers, buyers can give to sellers, and that acceptability should be there whenever they want to purchase goods and services. Then unit of account, where it's a yardstick. We note goods, good prices in terms of dollars. That's our unit of account function. And then the store of value, where if we keep money now, and if we keep it in the bank, definitely we are getting interest. But if we keep it under the pillow, still after 5 years, we will be able to use that money. Like, there will be inflation, so the value is going to go down. But still that money is not going to degrade, right? Like, you would be able to use it. So that's the store of value function. So for money for Bitcoin to be money, and why did we require money? Because back in the day, when there was no money, no cash, we used to have a barter system, right? So we used to, exchange goods for goods. But that that started a problem of the double coincidence of wants, that if I want to, this is what I say in class, right? If I want to exchange this pen for a water bottle, then I need to find someone who would exchange water bottle and take this pen. So it's difficult to find, that, people with the opposite wants. And now with internet, it might be a little easy, but when you have money, it's simpler, right? I can just, sell this pen off, and I can just go buy a water bottle. I don't need to find someone to exchange. So then, so if Bitcoin has to be this money, it needs to have this medium of exchange function, and we should be able to keep track of all the transactions, right? Because why do we trust banks? Because bank is maintaining a ledger, and it is keeping a stock of our accounts, like how much money I have in my checking account, and I don't have to worry about all that details. But then if Bitcoin, this technology needs to work, then it has to be secured, and somewhere this account needs to be maintained. And then we used to have gold standard before that. Our dollars were pegged against a gold, and that started having issues, and we did away with that in 1971, and we started this fiat currency where our dollar just has its own value, but it's not pegged against gold. And so now what is the what is it with fiat currencies? That it's backed by government. And so if the government says that, oh, this is this doesn't this is not dollar, or this is we are not going to back it, then that is mere paper. Okay, so you might have seen or know that when there was Second World War, and after that there was hyperinflation, those cash were were reduced to mere paper, and where people were just burning those and not exchanging for goods. So there, the way we have done things till now, we have government is involved in this kind of a financial process, and we have trusted government to do that for us. And so if Bitcoin has to be considered as a currency, it needs to suffice those conditions. And I have my reservations with when it's when Bitcoin is is considered as a medium of exchange, which has become very popular. And now many companies have started accepting Bitcoin, where like PayPal or Overstock or Starbucks, even you can buy coffee using Bitcoin. But that they're getting some sort of security, that's what's bothering me, some sort of security from somewhere, like otherwise the problem with Bitcoin is very, very volatile. As I was quoting the price, I was telling you, the price has changed in these last 4 hours. So if we are going to buy a cup of coffee, knowing that, okay, it might take us like 0.00002 Bitcoin, if the price is not in terms of dollars, but the price is in terms of Bitcoin. But if the Bitcoin price changes, then the value of my coffee, right? Like the coffee, how many Bitcoins I should pay to get a cup of coffee, that changes as well. So what I have learned is that when you're paying by Bitcoin, they're using some sort of a digital wallet, they're using some sort of exchange like Coinbase or something, where you can also buy Bitcoins. So they're using something, some gateway, and when they timestamp it, and the exchange takes place at that time. So if the, if you buy after, half an hour, the number of Bitcoins might change. But if it's so volatile, I don't know how this is sustainable. It has definitely something to do with network effect. That if more people started accepting it, it would gain popularity, but the volatility needs to stabilize a little bit to again be a better medium of exchange. But if the volatility gets more stable, then the store of value or the investment opportunity diminishes from Bitcoin. That's the problem. So with Bitcoin being more volatile, the medium of exchange function is a little bit trouble, and also the unit of account, because how do you even post prices with such a volatile account, right? Like Bitcoin being so volatile. So we'll see how this thing goes, and that's why when I'll come to this, when El Salvador started this, started accepting Bitcoin as their major currency. So a little bit of El Salvador is that their own currency, I forgot its name, Conin or something, Colon. So that was already very, very volatile, and so they had dollar as their major currency. And then they introduced this, and that has something to do with this. Their president, who's a very young president. He's a Twitter guy, and he was all about Bitcoin. And so last time I had read, it was they were about to start, and I was very nervous, like how this thing is going to roll out. And yesterday or day before, I saw a video on YouTube where a person, he has traveled all over the world, and he goes to El Salvador just to test out this Bitcoin thing, that if it's really happening or not. And he actually did not face much problem. The government has started a lot of Bitcoin ATMs. They have invested in Bitcoins. They have started these ATMs where you can go and just use your phone and can get Bitcoins added to your wallet. So, but interestingly, this country is had 70% of the population did not have bank account. It might be due to the fact that they did not have trust on the government, or how things were. People just did not engage too much into banking system. So introducing Bitcoin there, so much of technology right away there, just using and just making internet more available, and where half of the citizens don't even have internet. So I don't know how this is even working, but it's everything is done by phone. So it's not like they have good Wi-Fi connectivity or anything. It's just maybe fiber optics or something. Everybody is getting phone connection and internet with that, and they're just using this as a digital currency. And the way it has turned out, like things are rolling, but IMF, International Monetary Fund, which is one of the global, primary global entity for giving loans and all that, they have urged El Salvador to stop this Bitcoin thing, because there's is that they don't know what the country actually, what kind of assets they have, and so to give out loans and how to even get the repayment on the loan, that's what is making them nervous, because it's a completely new world out there. So, and also this guy made this announcement that they're going to make a Bitcoin city at the base of a volcano, and asking people to invest in Bitcoin. So it's a little murky out there. Everything is getting a little too roiled up. It's it's the currency, it's the investment, and now it's the Bitcoin city. So internet problem, who knows? We'll see. some fun fact is that that one of the major one of the problems, with or not, I would say one of the issues you should be concerned about, or you should keep in mind, is remembering your password, because there's no authority you could go to if you lose your password. And these two cases have made headlines, where this Stephen Thomas, and so basically these people, both of these guys, they were miners before, because they were one of the, they used to deal with mining bitcoins, one of these techies, way at the beginning. So what they used to get is, as I said, like, nobody is paying them, right? So when they used to mine, it was a very close community, everything open source. But if you knew how to do it and you were happy to do it, once you were doing all that validating and all that, helping mint new Bitcoin, you would get Bitcoin in return. So they accumulated, Bitcoins at the beginning. And this Stephen Thomas, he's German, but he's based in San Francisco, IT professional, and he forgot his password to this, to the wallet. And it's like a 40-digit password, and he has 10 tries. Last time I read, he has already used 8 of his tries, and right now it's, his portfolio is worth billions of dollars, and he can't remember his password. And this other guy, James Howells, he's this from Wales, England, and it's a sad story too, because he was one of the early miners too, and he at that time, it was not everything online that you could, when the miners were doing it, they were not working off servers, they were working off home computers. And so he had this information stored in an external hard drive, and by mistake, he had thrown it away. And now he had 7,500 Bitcoins. One Bitcoin is now 45 grand. And so what did I tell you? Yeah, so it's like huge amount of money. And there was a recent article on New Yorker where this guy has lost his family, and like he's gone into a total different state altogether after losing all that. But also the interesting part was so it was in a hard drive, so it was not like he did not remember his password. He needs to get access to that physical hard drive, and is thrown in the trash. And so he wanted he wanted to go and find it from the dump. He's been trying for like almost 10 years now, but the city officials are not allowing him because it's very, very dangerous. But he's just going crazy. But if you can read the article on New Yorker, it's really fascinating, and it's really sad too. It made me really sad after reading that, like, how it can mess up your life as well. So at that time, again, Bitcoins were just not as as valuable. Now it has become valuable, and they are facing the problem. They're just missing out on that. So yeah, and like, what's in it for us? Like, yes, I mean, here after the pandemic, or during the pandemic, there was a lot of stimulus payments given out. And at that time, when nothing is free in this world, so when stimulus money is given out, it's Fed was actually printing all that money. So there's increased money supply, increased cash in circulation. And they do that by selling, treasury securities to corporations, foreign investors, etc. This leads to higher demand for Bitcoins because people have extra cash in their hand. But again, if you need, when we saw that we had the lockdown and all that, and when you really need, bread and milk and all that, we're not at that stage where you can do with Bitcoin. You need the physical currency, physical cash in hand. in terms of disasters. So that's also one thing, that we won't be in a world where it's completely taken over by cryptocurrency. We would still have a physical currency around, but yeah, cryptocurrency is another mode of investment, or you can say where you can speculate. I have written one thing. So yeah, so I don't see this happening in the US, that like what happened in El Salvador, that Bitcoin has taken over as the main, like it has become the main currency. Dollar is still very strong, so it will not happen in US, but it's going to be a way to hedge your risk, or to speculate and to put money in Bitcoin. And again, no harm in buying, putting some money in Bitcoin portfolio. It's very safe, and you're not going to lose money. And again, like, you're not going to trade every day. Just keep some and forget about it, and see what, where it stands in 2 years. And in 2 years, if the price is very good, just sell it off. Just see what those people, the early miners, what they're going through right now. They did not consider those as valuable, but now, for some reason, in this new age, new world, it has become very, very valuable. Okay, so I can keep going on and on, but let's stop here, and let me take questions.
Yeah, Professor Dhar, we do have some questions in the chat. Thank you. The first question is from Jonas. Sandy, what backs Bitcoin?
What backs Bitcoin?
What does
Public trust. It's the technology.
Okay.
It's the lack of government oversight. It's that free nature, that it's technology which is immutable. It cannot be replaced, and it can be viewed by anybody. Like, it's very transparent. So so we need to be a techie to actually view it, but the way this foundation is very robust. So that is the main thing: security,
public trust. The other one is from Nancy Fifield. I assume you can only deal with someone else who has Bitcoins, who also has Bitcoins.
Say it again.
So can you only deal with someone else who also has Bitcoins?
No, you like.
So you both have to have Bitcoins, or is it?
Like, if I don't have Bitcoin, but I get paid in Bitcoin, I just need to have I need to have an account with an exchange, like a Coinbase or something, and I can exchange my Bitcoin for cash. So I don't need to hold on to the Bitcoin. I can just change it for cash. But yes, if there is some transaction happening between two people, again, there could be multiple ways. It could be direct exchange of Bitcoin, or it could, but why would you exchange Bitcoin? Like, if you need to pay someone, and if it is in dollars, then you want to pay in Bitcoin, you would just just like we do it with foreign currency, you would convert it into Bitcoin and then pay if that person wants to get paid by Bitcoin. So it's like treating it as a foreign currency, I would say.
Good. And then Michael Cheney says, what is the cap on Ethereum and current usage?
I don't know the cap, but it's just another cryptocurrency. This really young guy from Russia, he's based in Canada now. He started it, and it has a good market value. And so again, people who are dealing in these cryptocurrencies, they're just they want to play with it. So they're just they want to speculate. They want to say that, okay, maybe invest there and price will rise or something. It's just I don't see, there's no intrinsic value in anything, right? It's just created out of thin air. Otherwise, why would anybody even invest in Dogecoin. It still, makes me amazed, like why? Because it had nothing, but still people are doing it and playing with it and see like, oh, let's see if the price rises or not.
And
Yeah.
how, Michael Cheney also asks, how can you invest on the supply side of crypto miners and providers?
Yeah, so
is BitQ an ETF for this? Wow, that's a technical question.
That's a technical, yeah. I'm sure, because as I was reading on these, there are communities, there are forums where they talk about it, and I'm sure the miners, they don't want to go out and announce that they are mining. As again, like government, or how miners are tracked is from the location. They don't know who are the miners. They just they find the IP address or something. They look at the location. Governments track them by electricity usage, and that's why they they don't want them to use. And I did not get chance to go over these. Sorry, where did I write that? Yeah, so consumption of electricity is so huge. Like it uses same kind of electricity as the whole of Finland. Like for mining. So imagine like if it's it's happening in some part of the country, and it's taking up so much of electricity consumption that they are in that radar. But miners, I think that they talk in like hackers only. I don't want to degrade them or anything, but they are super smart people. So and they're doing it on their free time. Like as I was reading the guy James Howell from Wales, his story, that he was doing it at night, like he just wanted to play with, experiment, and he was doing it as a part of hobby. And the reason he stopped was because it was bothering his wife, because it was the computers use so much electricity and it was making a churning sound that his wife was like, stop it. But and also he had to pay some extra electricity bill. So other than that, I don't know. Yeah.
No. Thank you. And then we have more questions. How did the recent Borg steal take place? Borg steal. Do you read the question?
Let me see. Yeah, so one second. Recent Borg steal. I don't understand.
Let's go to the other one.
Yeah.
Does its value mirror the DJA? Does its Heather Chase asks, does its value mirror
these big steal? I think it's referring to this last steal. Oh, it's the recent Borg steal. It's the big steal take place. Okay. Yeah, I think it was because you cannot steal, like you cannot hack the system. So most likely, as I understood it, it was it's like the exchange or something. You are if you're a financial planner or something and you are asking people to invest, and there was a way that people invested in Bitcoin, but also they had access to it somehow. It was a little too much for me to understand too, but for sure that blockchain technology cannot be hacked. So if someone is if some stealing is going on, is happening at other levels. So it's like when like I'm acting as a planner and I ask you to pay me money and I'm going to buy Bitcoin. So basically I'm taking that money out of you and, you know, just putting it in my account, or taking Bitcoin out of your account and putting in my account. So that kind of stealing.
Mm-hmm. Thank you. Can you explain how crypto is made? Asks Lucia.
So it's that through the blockchain technology. So it's like nothing is, so there's no physical coin, right? So it is it's that, you know, it follows some algorithm, and it's if we go back here, it follows this. How can I? Yeah. So it follows this. Sorry. This algorithm, and that's what miners are doing, right? So it's a secretive thing. I would not say secretive, but that's something that only these techies know, and it follows some sort of, you know, technology. I'm not a coder or anything, so I have no idea, but this is what, as a layman, I understand is that you know, when every time a new transaction happens, it verifies the transaction, see that if you know, the sender and the receiver, you know, both are valid or not, and they are numbers. So again, if I punch in the wrong number, you know, as I said, if I want to send money to Isabel, and you know, just like, you know, email ID, you have a, you know, you have a digital ID, right? And if I punch in the wrong number, it can go to someone else. Okay, that way it is, you know, that could be a problem. But every time transaction is happening, they have a way to, you know, that's how that white paper by Satoshi Nakamoto had said, like, you know, how this technology will churn out new Bitcoin as more and more transaction will take place. And they know it. I mean, this is why, you know, it's public, but it has to be, it's like in code. So they have to understand. So these miners only know, we don't know. And there's no physical, nothing is made. So it's like every time a new one is made, and it's added to this number of Bitcoins in circulation.
That's a great sheet about the infrastructure. Talking about a transaction, if Ron, if I spend 68K and get 1 Bitcoin, what does it do for me? Can I buy a beer?
That will be an expensive beer, right? Yes, of course you can buy, because as I said, Bitcoin is accepted in most of the places. You can go, you can buy Starbucks and coffee and whatnot. So one interesting story is in 2010, one of these miners, right at that time. So he, this guy, his name was Laszlo Hansiek or somebody. So he was, you know, he thought this is just total crap. And so he gave 2 Bitcoins. Did he 2 or more? Yeah, I forgot how many Bitcoins he gave, sorry, to buy him a pizza. And whoever got it now, like, imagine, like, you know, if it was 2 Bitcoins also, now that 2 Bitcoins is more than 100 grand, right? So, you know, when he's asked now, like, what do you think? Like, you know, you gave away Bitcoins to buy pizza, and he goes like, yeah, whatever, you know, I've moved on. So yes, I mean, that's really money. Like, you know, that's why I said, you know, keep some, you know, if you keep if you put like $1,000 also in Bitcoin at this price, you know, when the price is going low, you know, if it's 30,000 or something, you buy, you know, point something Bitcoin, right? But who knows, like, you know, 3 years ago, nobody would have thought that it would reach 68K. So now, sitting now in 3 years, if it is more than 100 grand, you know, you have made money. You can buy much more than beer.
Dr. Dhar, the next question is, what is Bitcoin mining? Sheila asks.
Bitcoin mining is just all this technology. This is how, since this paper, right? So it said that there is 21 million Bitcoins that's available. Not 20, all those 21 million is not available right now. So from 2009 or something, when Bitcoin started being available, every time, you know, a transaction was taking place, new Bitcoins were formed. So all those details were given in that white paper. This thing is nothing but calling mining, like when new Bitcoins are formed or going through this kind of a you know, technology, you know, using blockchain technology every time, you know, you're doing this kind of transaction. So back in 2009 or 2013, there were, you know, like these guys who had lost you know, their, you know, or their portfolio. They had like 7,500 Bitcoins or something. Those were, you know, the total number of Bitcoin, if we can always go back and check, you know, as I said, if it's changing every 10 minutes, 20 minutes. So right now we saw it was what, 18.9 billion.
Oh.
So at that time it was way less. So over years, over time, new Bitcoins are getting created, but it can only go until 21. So they have a way to do it. It's all algorithm that the formation is slower as we approach 21.
Thank you. And then Minnie asks, recently a couple in New York was arrested for stealing Bitcoins. How could that happen?
That is the same, that I think that is the exactly that Big Steel was talking about, because yeah, I think that was, you know, it was more of doing that financial planning kind of thing. And they, you know, they stole it from others. So it's not like, you know, they can steal from the actual, you know, like from the technology, from mining or something. They cannot do that. They cannot hack the system. They can hack exchanges. They can hack, or they can lure people to invest, and they might just, you know, they're telling them that, oh, it's yours, but they are, you know, putting them in their account. Something like that, something illegal like that.
Mm-hmm. Then Billy, thank you. Billy Steers asks, is the long-term supply of cryptocurrency fixed or constrained by the resource use?
It's fixed, right? It's 21 million. That's fixed.
Yeah, you said so.
Yeah, that's fixed. That cannot be altered. That's how it is designed. That's written in the white paper. Everybody knows it. That's I think that's another thing that people don't like, this unlimited cash flow. That hurts people's portfolios with inflation. So this is like the scarcity value would increase the, you know, let's say after 2040, when the 21 million is already out there, you know, it could only be circulation. Nobody, at least that's what it is right now, nobody can add to that. That's how this system is designed. That's what they said, that you cannot alter that system. 21 million cannot be overstepped.
No. Then somebody said Big Steel. Somebody said
Big Steel is what, that box steel we were reading. I think that's referring to that. Made that correction. Yeah.
And then somebody said, Molly, a brief but specific summary of a complex topic. Thank you. And Bobby says,
yes, it's very.
This sounds like make-believe. Can I take the coins and put them in my pockets? How do you do internet with no computer? Do you buy it with dollars? Can you ever get your money dollars back? Canada is talking about confiscating truckers. Canada is talking about confiscating truckers' Bitcoin. Can they? How? How are the coins made? From what? This sounds like a total scam.
Yeah, I mean, as I told you, I was up, you know, I was upfront. I said, I don't understand, you know, several of these things, but, you know, as I kept reading El Salvador's story, that yes, you cannot put them in your pockets. They're working off your phone. So, you know, they go to these ATMs and, you know, they convert. So they actually, you know, the person shows that, you know, they converted $80 to, that's US dollars, that's their currency they use. So $80 into Bitcoin. And so now they have Bitcoin in their pocket, which is in their digital wallet. And now this is like a QR code, and everywhere they're going, just like you pay with Apple Pay or something, that's taken out of your credit card account or your debit account, out of your debit card checking account. This one is going out of your Bitcoin, Bitcoin account. So, I mean, it's, when it's like your Starbucks card, you want to pay from the app, and your the balance goes down, you want to reload it. That's what exactly they're doing. But there is really some, what really makes me nervous is, if there is no bank, then the government is definitely doing as much, because who takes care of the volatility? If the government is not backing it up, how is that volatility taken care of? Because when I go to pay for a coffee in the morning, and I go to pay for a coffee in the evening, like if we go to Starbucks, we are paying $4 morning or night, like for the same cup of coffee. But over there, if you're paying different amounts, like for the same cup of coffee, does it, I mean, will I have the same reaction? So that is what I still don't understand. But and this country, El Salvador, it's not like they're super rich or anything. They're already struggling, and they're, they already have they had to do away with their own currency, and they have US dollars in place, and now they have another volatile currency. But definitely US dollars is in the periphery. That they're saying that the Bitcoin, you can do everything with Bitcoin, but it's still getting transferred from US dollars. So it is complicated. But I don't know about the Canada thing. I have no idea.
No, I haven't read that either. But
yeah.
But then Catherine says, so why would you risk investing in this? What's the point?
The point is, again, hedging. Like, if your savings is getting depleted because of high inflation, if the government does not take have good policies, then the inflation can go up. And in US, the interest rates are already very, very low. So as you are looking for other options to invest, just like stocks and bonds or mutual funds, this is just another way. But as we mentioned before, the underlying collateral is internet, and also this technology which cannot be hacked. So unless if you remember your password and do it in a digital wallet and all that, it's you're kind of safe. And we're not saying that put all your money there. We're not there. Most of us are not there, doing active speculation. We're just putting some money there. And if it, things are better in 2 years, if that portfolio looks good, I can just sell them and, take the cash again.
Do you have time for one more question?
Yeah.
Okay.
Yeah.
How can one be sure that anything in the white paper is sure and accurate? Who is to say the 21 limit will not change? And if it does, who does one go after? Is there a responsible anonymous party?
Good question.
Yeah.
The author of that white paper was anonymous. I mean, it had a name, but it's as good as anonymous. That person or that group of people never came to the forefront. There have been some scams, like, some people have come forward and said, some person, they have come forward and said, like, I am Satoshi Nakamoto, but then they were proved wrong. But yes, I mean, that's why I don't know, like, it's really cryptic word for me as well, this white paper. And that's what amazes me, that, people started believing in this, and they created, this world of, investment, or this currency, where a country has adopted this as a currency, which started from this 9-page white paper. And so, most of those details are, you can read it. I read it. I did not follow most of the technical part, like all these blockchain and all these computer language I don't follow. But yes, it's mentioned that it cannot, it's capped at 21 million. That's the crux of it. But I don't know who it is still so much out there. Who knows what will happen in 30-40 years. And yeah. That guy, or I keep saying guy, but I don't know who that person, that Satoshi Nakamoto, like, that person till date have the highest Bitcoin portfolio and has not claimed it. So from 21 million, like, 1 million is already unclaimed.
Excuse me, another question. She's asked, do you pay taxes on the profit you make on Bitcoins?
So I think US is starting to put taxes on it. So including cryptocurrency, as I'm not totally sure. I saw something that US, it's legal and it's starting to go off, tax it. It's different in different countries. The laws are changing every year. Most of the countries now, when they're making it legal, they want the government incentive is also to tax from the profit.
That says taxes. I'm pretty sure it has to be recorded on your tax returns.
Mm-hmm.
Oh, yeah.
Yeah, if it is, like if the government would collect tax, then it has to go through the regular tax, filing process.
And another question: have you bought any Bitcoin?
No, I thought I was. Now I'm going to buy, because let there be another crash, let it fall again, and then I'll buy some. But yes, what I've told you, that's what I believe also, that we should just put some amount of money there and just forget, and then check back in 2-3 years.
But make sure you don't forget your password.
Yes.
Oh man,
it's a 40-digit one. That's what it is. That's why it's not at all you cannot guess. No. And that's the thing. And there have been some discussion in that forum with miners when these people forgot their password, and at that time Satoshi Nakamoto was also participating in these conversations. They said, like, that also makes this system strong, is that nobody else has access to your account. So if you forget your password, like if someone else could actually access your account, then the novelty of this approach would go down, right? Like, if you have to trust the system, you have to be absolutely sure that nobody else is overseeing your account, has access to your account. So you're taking full charge of your account. So if you forget your password, you have to take responsibility.
Yeah, two more. Yes, any profit on redemption, just like capital gains on stocks. This is referring to the taxes.
Yeah.
And then the last one, Bobby, who gives you back your money dollars if you want to cash in and out?
So you can do those through exchanges, so Coinbase or something. So it's like, they are just as I said, you deal with stocks and bonds. There is an exchange where you buy, you maintain a security account, or when you buy foreign exchange, you're changing it, changing pounds to dollars and all that, exactly the same way. Because now it's like a network effect also. So now, as more and more people are engaging in this, so these exchanges are there where you just exchange Bitcoins, because you can sell Bitcoins and then other people would buy it pretty soon.
Those were the questions.
I hope I had been able to answer. Yeah, I'm sorry if I was not more clear on certain things, because I'm also trying to understand this, and this is so much of technology, and I try to, understand the, the economics part of it. And that keeps bothering me. Like how can you make something which is good as a stock, which has a store of value as, also a medium of transaction. So, but we'll see.
Yeah, no, thank you for making us more literate in the language, the lingo, and the infrastructure behind it.
Yeah.
We hope we can do it again, a little more in depth, or all the developments that we keep au courant.
Yeah.
So yes,
Yeah,
thank you
yeah.
so much
Yeah.
for your time and
Absolutely.
for your wonderful lecture. Thank you everyone for joining us
Thank you
tonight.
everyone. Thank you.
Have a great evening, and a special thanks to the friends of the Roxbury Library who make these programs possible. The next one is March 2nd, and it will be about the Hudson River School, the paintings, and there will be 2 art historians talking about the Hudson River School paintings. So I hope you can join us in 2 weeks. Dr. Dhar, thank you so much again.
Thank
Have
you.
a great
Thank you.
evening.
Okay.
Thank you, everyone.
Bye-bye.
Bye.
Bye.